And I think a lot of people right now are underpositioned because they think there's a recession coming, or we're at the end of the cycle, or people's credit card payments are too high and the cost of milk is too high. And it's like, none of that has anything to do with whether Bitcoin's going to go up. Bitcoin's going to go up because they're printing a lot of money in a lot of different currencies. And as long as we create less Bitcoin than they print fiat, then the price is going to go up.
The Blockworks Digital Asset Summit, crypto's premier institutional event, is coming back to London this October, the 13th to the 15th. You'll hear from top names across global finance, DeFi, and policy. Think BlackRock, Circle, Coinbase, and the UK Parliament. Notable speakers already locked in include Danny Masters from CoinShares, Jeff Park from Bitwise, and plenty more to come. There's also a VIP dinner on October the 13th. That's for speakers and VIP ticket holders only. It will sell out. It's all happening at the Old Billingsgate in London. Use code SUPPLY100 at checkout for £100 off.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions the company sponsors or projects discussed.
Hey everybody, Pete Rizzo, the Bitcoin historian on X, here to welcome you to another great episode of Supply Shock. All-time highs are imminent. We're here to talk about all that's happening in the Bitcoin and wider crypto markets. We've got a great special guest today, Mike Alfred, founder and managing partner at Alpine Fox, and also a board member at Iron, and most recently backed, reborn as a digital asset treasury company, coming to the markets and storming up the charts on various stock platforms. Mike, welcome to the program. Happy to have you.
Yeah, Pete, thanks for having me.
So, Mike, let's dive in. We're just starting October here. High conviction amongst the Bitcoin crypto Twitter intelligentsia that we're headed up to a potential blow off top at the end of the year. How are you thinking about this market, and how are you feeling about this question of the 4-year cycle? Is it upon us again?
I'm not sure that we'll get the same type of cycle as the last couple, because the institutional factors are much stronger this time. The ETF, the gap accounting rules, the treasury companies, among many other things. And so I think it's more likely that this cycle runs into 2026 or maybe even 27. I think it'll probably couple up with the AI CapEx cycle. I think if you're hoping and thinking that we're going to get one spike in November, December, that's easy to pick off, and then we get some sort of correction, I think that's probably going to end up being wrong. Like, it's much more likely that if you sell too soon, you'll end up chasing, and that'll drive the cycle into 26. I think if you look back historically, like the liquidity cycle and the election cycle, like almost perfectly correlated with kind of the Bitcoin cycles. And it may have convinced us that the halving cycle has more impact on the price of Bitcoin than maybe it actually does. And that if you look at the structural changes in the market and overall market structure, especially the cycle, like you can probably build a pretty good case for Bitcoin running out into 2026. So my current kind of mental model is like, yes, we should go higher in Q4. Like, I expect Q4 to be very positive. I've been thinking that for months, but I don't think this will be it. Like, if we go to unless we go to like 300,000 or something like that by the end of the year, in which case, like, everybody in retail land, like all of your neighbors and friends and Uber drivers and stuff, are going to want to talk about it. If I don't see that type of behavior, then I won't bite on it being the end of the cycle.
Yeah, well, let's talk about this dynamic. Typically, we've seen a big blow off top. You think about 2013 going up from $200 to $1,000. You talk about 2017 going up from $2,000 to $20,000. 2021 didn't quite see that dynamic. Obviously, some folks, thinking that the total move from 5,000 to 60,000 was maybe a bit diminished. Are you sort of in the camp that Bitcoin can still move upwards with the sort of, fury that we may remember from those early days?
Well, I mean, look, 2021, we went up to 69 or so from 3,200. That was the low in December 2018. I know that because I was buying lots of Bitcoin in December of 2018, which ended up in retrospect to be a pretty decent time to do that. This cycle, we bottomed out at 16,000 and we've tapped 124. I don't know if it needs to be sort of as parabolic as it used to be, but I do think we get to $1 million by 2033, which is only 8 years from now. So we need to make some big chunk of that move, either before the end of this sort of next liquidity cycle or in the next one in order to get there. And so I wouldn't be surprised if, again, the cycle top isn't till 300, 400, 500K, and that cycle top isn't until this time next year. So I just have a different view on that than most people.
Yeah, let's talk about the elongated market, right? For some folks like myself, I've been in the market since 13, 14. Bull market, I think maybe started in April of 2024, right? With the ETFs, kind of having that first big all-time high before the halving. I guess what would you say, are the biggest factors that would drive the cycle to be longer? Of course, you've stated already that, you do think we will have a longer cycle, but what are those actual structural changes? And I guess, how do you know that they're robust enough to carry the price further?
Well, you never know, right? It's all probabilistic. I mean, I'm a professional investor, right? So like I never, on Twitter, I may say something in absolute terms because it gets engagement and it's fun. But in actuality, like when you're investing, you're just building models for what you think is likely to happen and then sort of probabilistically weighting it. When I look at the ETFs as like a primary buyer, when I look at MSTR and other treasury companies as a primary buyer, like this has largely been an institutionally driven cycle with very little traditional retail involvement, right? Like there aren't people like rushing to open Coinbase accounts to go smash buy Bitcoin because they heard about them. Whatever.
Still pretty low. Traditional indicators, Google search low as well, or near all-time lows.
And I think some of that is the path that this cycle has taken. It's actually been a very tricky cycle because a lot of the moves up have happened suddenly after like a little drawdown, such that most people just weren't paying attention. Like I remember October, November timeframe of 2023. Even a lot of like serious Bitcoin influencer type people were totally fooled. They were talking about at 25K. They're like, it can't possibly go to 40 or 50 this year. It's impossible. And I'm like, are you insane? Like this is Bitcoin. Bitcoin's going to do exactly what you think is unlikely. And so like right now, a lot of people are like, oh, it's not going to go over 130 or 150 this year. And I think that's probably wrong. Like I think it's more likely that Bitcoin finishes the year between 150 and 200. And as long as it's sort of this, it feels the same as now, right? Because we had all these consolidation periods. So we had this long consolidation period in the summer of 23. We had a new all-time high in Q1 of 24, just post the ETF, but then we had a long consolidation period up until the election. Then we broke out into January and people thought, oh, this is the run. And then we had a long consolidation period until quite recently. And so it's been very hard unless you just bought and held. And a lot of traders, if you look on X, like there's all these gurus telling you to buy and sell based on red arrows and blue dots and RSIs and moving average crossovers and all this BS that has nothing to do with what hard money is. And so it's whipsawed a lot of people out of the market. And I think a lot of people right now are underpositioned because they think there's a recession coming or we're at the end of the cycle or people's credit card payments are too high and the cost of milk is too high. And it's like none of that has anything to do with whether Bitcoin's going to go up. Bitcoin's going to go up because they're printing a lot of money in a lot of different currencies. And as long as we create less Bitcoin than they print fiat, then the price is going to go up over time. So I don't buy many of these arguments. Like I think most people, like we're all just guessing, right? But there are some people that have a better track record of guessing and then actually investing around this. And I think any really sharp investor looking at this setup is their biggest concern is going to be that they're not long enough, right? And that they sell too much too soon. So like anyone who thinks they're going to sell in November, December, and then like not have to chase in Q1, Q2, I think they're going to end up being disappointed this cycle.
Well, let's talk about maybe what I think is been the recent kind of observation is just the lack of catalysts, right? It seems like earlier this year we burned through a number of very sexy headlines, right? There was this phase where every country was going to do the national strategic reserve, where the U.S. Was going to emerge as a buyer. Same thing with the Bitcoin treasury companies. We had this kind of kumbaya euphoria where sort of everybody was winning earlier this year. That's kind of faded off. Doesn't really feel right now that there is a dominant narrative or a catalyst. As you look to the end of the year, is there something that you see on the calendar where you feel like, this cycle could get some sort of shape or movement? I say this because I think, most of the other cycles we've seen, tend to have a steady drumbeat. In 2013, it was merchant adoption, right? It was large kind of retailers coming online and building the network. 2017, maybe a little different, but, major protocols and VCs and investors kind of coming to the market. I guess what are the catalysts that you see on the horizon?
I mean, look, there are plenty of catalysts, but just as a premise, I don't believe and I don't buy into this concept that like asset prices require specific catalyst in every situation. Like if I think back to like my 25 plus years now of trading public assets, a lot of the biggest moves in the assets that I've held have happened with like little to no news. And what tends to happen over time is we tell ourselves narratives after the fact to try to explain retroactively what happened. And then we remember it as something that, oh, well, of course it went up because XYZ thing happened. But people don't always remember those things correctly. Like what actually happens in a lot of cases is assets go up because there's no reason for them not to, right? They go up because of supply demand dynamics. Bitcoin in particular is a highly impulsive, highly reflexive asset where it tends to do nothing most of the time and bores people to sleep. And then it suddenly wakes up and run, oftentimes with little to no like particular reason tied to it. And then after it's run a good ways, some news item comes out and people say, see, I told you that was the reason why it was going up. And I'm just not sure. I don't buy that. That said, I'm going to answer the question because I think it's a good question. The question is, what could be the thing that we blame the higher prices on later as the reason, like government activity that goes beyond what we've seen today, like real strategic Bitcoin reserve development beyond like the sort of low level and sort of less specific things that have happened to date, as well as like broader corporate adoption. Like it's one thing for MSTR to buy, but everyone thinks MSTR is going to buy. So that's sort of priced in to flows. If all of a sudden like NVIDIA or Apple or Amazon or Microsoft or somebody were to change their mind and say, we're going to adopt some sort of policy, like obviously that would be a huge market moving event. It'd probably be like a 20K daily candle, but I don't personally believe we need any of that. I think the macro right now, the setup with interest rates in the US, the money printing that's happened globally, global M2, yields coming down, the small cap index in the US breaking out, the US government shutdown, like basically anything that like causes people to doubt the long-term sort of credibility of sovereign sort of nations and their institutions, I think will drive people into Bitcoin. And there's just a utility component. Like people have figured out in a lot of emerging countries that their government's going to debase their currency. And that's like it's like a mind virus that doesn't get adopted perfectly linearly. It's like happens slowly and then it accelerates partially reflexively with price. Price goes up, it drives additional acceleration. And so I think it can feed on itself. Like I don't actually think there needs we may look back in December and say, I have no idea why, but Bitcoin's 180K and they're going to make up because you got to write news articles and you got to ascribe reasons for it to happen. So they'll make up things that people that did happen. They'll say, oh, that's the reason. But in my experience, again, with equities and other assets, like there isn't always a reason. There doesn't need to be a reason. Sometimes it's just sort of the math and probabilities and reflexivity.
As you look at your time in markets, is there another market cycle in some other asset where it sort of reminds you of where Bitcoin is today and there's interesting parallels?
Yeah, I actually thought that 2017 in Bitcoin was exactly like the dot-com bubble because I was trading tech stocks in my Stanford dorm room in 1999, believe it or not, trading InfoSpace and Inktomi and CMGI and like a bunch of random, small cap, internet related companies. And there'd be mornings you'd wake up, you'd be up 40%. It was just like crypto in 17. I think 21 was sort of curtailed by all of the paper Bitcoin and all of the fraud effectively that was happening in the ecosystem where people thought they were buying Bitcoin and they were buying it in a platform that didn't even have the Bitcoin. This cycle, I think, is built on a much sturdier foundation. So there's less parabolas, there's less euphoria, but there's also like a lot of the Bitcoin's custodied by Fidelity, right? A lot of the Bitcoin's custodied by Coinbase, and a lot of the nefarious actors have been wiped out. And so it's slower. It's a slower burn. It's a slower build. But when it does go, in my opinion, it'll be more sustainable because you're not going to have like a chain of collapses because most of the weakest players have blown up. There are other players that were not operating responsibly last cycle that are still alive because of scale. I'm not going to say their names anymore because they always get pissed when I talk about them. But like most people, especially institutions, have gotten wise to not using custodians that are like commingling assets, redenominating assets, like not backing their stablecoin one-to-one, et cetera. Like a lot of those activities, in-house market makers liquidating their own customers, et cetera. They're offshore and like not a lot of good investors that are sort of allocating at scale to this asset class are willing to work with them anymore. So I think it's a better like foundation to build on.
Yeah, we had someone on the podcast a few weeks back from a speaking on behalf of a company that does kind of lending in the space and things like that, and they weren't convinced that the contagion risk really has been solved. In the discussion we talked a lot about certain bad actors went away, but we still see this big consolidation, right? A lot of companies holding their Bitcoin with, custodians, the amount of custodians they can use being somewhat limited, at least until earlier this week when, maybe that changed with the SEC's definition of who qualifies as a custodian. So you don't see any risks maybe on this side, where even in the Bitcoin Treasury company movement, there's a lot of buying there. You don't see there being something where maybe there is a hole in the system. There's a third-party service provider that is weak and does, sort of cause a contagion.
I see risk everywhere. I mean, I'm an investor. It's what I do for a living. So like my entire life revolves around assessing risks, evaluating risks. But I always am careful about thinking through someone's motivations when they're sharing like a bearish or sort of negative sounding thesis. If I was a lender, I'd try to convince everybody that every other lender is not as solvent and not as useful and not as secure as I am. If I was a custodian, I'd do the same thing, right? But I'm not. I'm an independent investor. And so I just assess the risks as I see them. And I'm just telling you, in the 2020, 2021 cycle, the number of like 2-bit players running around raising Bitcoin, the Celsiuses and the BlockFis and the Valds, and you go down the list, there were dozens and dozens of these players that they were all like interacting with each other. They're all doing the grayscale Bitcoin Triced arb trade, right? They were all lending to each other, and then nobody knew who had what. Right. It's just different this time around. Yeah, there's always going to be risks. There'll be some failure every time asset prices fall 60, 80, 90%, especially in crypto. There'll be companies that get wiped out. But the systemic nature of the risk this time around is vastly reduced because so many of the worst large players have been removed from the field. So yeah, not poo-pooing that there's risk. There's always risk. But I will note, I didn't lose a single dollar last cycle to any failed platform because I know how to underwrite counterparties. There are a lot of people trading in crypto that have no traditional institutional investment background, right? They've never run a hedge fund, they've never run a company, they've never sat on a board, right? They don't really know what they're doing. Like maybe they made $1 million buying Bitcoin and that's their like primary thing that they've done. And that's great. But that doesn't maybe give you all the skill sets you need to evaluate whether you should put some of that $1 million into Celsius or BlockFi. I had that background. And so I went out of my way to warn people before they collapsed that they were risky platforms. And again, I'm just telling you from what I see. I'm not saying there's no risk, but the risk has been greatly diminished probabilistically from where it was 4 years ago.
What's the biggest narrative right now that you think is overbought? Some sort of narrative where everybody's kind of consensus on this idea, and you just think that people are off base.
I think everything is in better balance now. I'll tell you when things were out of whack, right? So like go back to Q1 of 2024. There was this narrative that CleanSpark would be the only successful Bitcoin miner because its hash was trading at like 10x the value of every other Bitcoin miner. We know what's happened since. Like CleanSpark has given back like a big chunk of that outperformance, and like others have risen up. Like the share price differentials, if you just look back to January 24, are pretty insane, right? The same thing happened in November of 24. Like MicroStrategy was the only Bitcoin proxy you ever needed to own, and all the dollars were flowing to MSTR, and the MNAV went to the moon. And what happened like near the peak of euphoria, nobody wanted to hear a bearish take. So I'd hold spaces and I'd warn people like, look, this type of euphoria usually ends badly. Nobody wanted to believe it because they were talking about infinite money glitches and it was going to go on forever, right? And so at different points in the cycle, these narratives persist. Like in the spring of this year, it was like everybody could launch a Bitcoin treasury company. Your janitor, a Bitcoin event planner could launch one, a social media influencer. We'll just give them $500 million. They'll buy Bitcoin and real value will be created. What's happened? Of course, the bubbles come out of that balloon. So I think what's the only things that are sort of left and working really well right now are things that have true fundamental value, where there's something about the business model that's actually sustainable. And so narratives that are just hot air have largely been squashed out. So I think things are in balance. Like I would continue to avoid anything that's all narrative and no fundamentals. But most of those things are pretty clear now because retail has been pretty badly bruised by chasing like second and third tier, Bitcoin treasury companies.
Well, let's hop into the Bitcoin Treasury company narrative. Obviously, talking about MSTR and what they're doing, and the kind of global expansion around this idea. Are you convinced that there's going to be more than one winner in each geography? How do you look at the market opportunity? Maybe let's just start there. Is there opportunity in the United States with all the value that Strategy has captured and all that they've been able to do?
I'm not sure in the U.S. Like Strategy's a leader. They're at the vanguard. Kudos to Saylor. Like what he's done is pretty amazing. And I don't think you can actually replicate it because of something called market impact. So if you wanted to catch MSTR in terms of total size, your buys right now, if you tried to chase them, would move the market enough that it would allow room for Saylor to do more preferreds, to do more convertibles, right, et cetera. And so there's really no way to catch him. And I think MSTR is quite unique for that reason alone, right? Like the primary reason, it's like from a path dependency standpoint, sort of like Bitcoin, right? You can't recreate Bitcoin unless you go back in time and created a coin that wasn't pre-mined with proof of work, that was super fair in the way it was launched, et cetera, and was basically out of the public eye for the first 3, 4, 5 years. So it was able to sort of evolve organically. Everything since then has been pre-mined, like VC backed, like founder led. There's a person involved, et cetera. I think MSTR is sort of that for treasury companies, where like a lot of people say they can build the next MSTR, but I think you had to be MSTR at the time that MSTR was MSTR in order to be MSTR. For everyone else, I have no idea, unless they can actually develop a sustainable business model that doesn't require them to tap capital markets. I think the moment you require the capital markets to give you access to financing, whether that's straight debt, preferred equity, convertible debt, et cetera, like you're going to be at the whims of that market. And there'll be periods of time where that market is closed. And therefore your business model is closed, unless you have some sort of embedded flywheel within your business that's Bitcoin native that allows you to accumulate Bitcoin even when the capital markets are closed. The other geographies are different. And like what we're doing at Backed is targeting specific jurisdictions where it's very difficult to get control of a public company. There's a bunch of rules and regulations around it. There's a bunch of tax related issues that make it hard to do that. And so there are some markets in Asia where there still may be opportunity. I think MetaPlanet has sort of identified one of them. I think there are several others. At Backed, the strategy is not to put the Bitcoin on our own balance sheet in the US as an NYSE listed company, but instead to buy minority controlled stakes in markets where, again, it's quite hard to get control of a public company from a regulatory perspective, and where there's maybe some moat that's sustainable. That's not the only thing, obviously, we're doing it back, but it is one strategy to kind of take advantage of this market. So I'd say I'm somewhat neutral here because the valuations have come down a lot. But I wouldn't be like excited to throw a lot of new money into just US domestic treasury companies unless they have a really good story for how they can build their treasury without needing the capital markets. And right now, there really is no example of that, in my opinion, that's at scale.
Yeah, I think about markets, you think about access, right? Circle, obviously, earlier this year, kind of the only way to play the stablecoin trade, benefited pretty substantially from that. How do you think about just the diversity of options? Because it seems like, when the Bitcoin ETFs came out, or even MSTR, right, 2020, that was the only way for institutions to access capital other than on a grayscale. It was a pretty limited set of opportunities. Today, there's, going on 50 something companies in the US that are essentially offering some sort of proxy. There's, 10 ETFs at this point that are all trading. How do you view the saturation point? Because obviously, we're biased towards the Bitcoin future and hyper Bitcoinization, and Bitcoin being the base case of finance. So how do you think through this, right? It's like it feels oversaturated, but we know we're going to a future with more Bitcoin. So how do you think through it?
Look, it's not a zero-sum game, thankfully, in the long run, but it can be in terms of flows in the short term and mind share, right? So think about it. You're an institutional allocator and you have a mandate to put $100 million in this ecosystem. Is it easier or harder to do that today than it was 2, 3, 4 years ago? I'd say it's significantly harder because there's significantly more options and there's significantly more noise. And so I think if you're just, as I said, a generic treasury company talking about MNAV and Bitcoin per share without anything sort of unique or compelling, right, that's differentiated from anyone else, I think it's going to be quite challenging to raise capital. Look, when the ETFs came in, it put a lot of pressure on the miners initially because miners were one of the best proxies the last cycle, right, to get quick access to Bitcoin without the restrictions that you'd have with certain brokers or in certain platforms. Right? Certain institutional investors could buy Marathon, but they could not access Bitcoin. The ETFs gave you like a pure play option to do that. Then MSTR, right, sort of took off, and people were like, "Oh, well, maybe now I shouldn't own the IBIT because MSTR is going to have a higher return," which worked until November of 2024, and since then it's been a terrible trade. You wanted to be long spot, and you didn't want to be long MSTR. And then more recently, the infrastructure companies like Iron and Cypher are outperforming the whole group. And if, in fact, across the full cycle, Iron is up over 50x off the bottom since December 22. It's the best performing Bitcoin-related company publicly traded by a mile. And there was a period of time as recently as April of this year where a bunch of people on X were saying, you're an idiot to own Iron and not Bitcoin treasury companies. So these narratives shift partially with performance because most people are operating without a waypoint. Like they don't have an anchor. They don't have a center of gravity. They're literally just reading posts on the internet and then whipsawing around based on price action. And that's a really good way to not make a lot of money in a cycle. It's much better to be thesis driven and have a view at the bottom of the cycle, like in December 22 or January 23, what did you believe to be true? And then you just map that over 3, 4, 5 years. And then you assess that and then you tweak it for the next cycle. But most people don't do that, right? It's longer duration. It forces you to be more patient. It forces you to take positions and sit still, sit on your hands. And, there's a lot of noise. And so what I see people doing is like sort of responding to that. And I didn't, right? Like I didn't make any changes to my allocation over the last 2.5 years, even in the periods of time where some of the things I was doing were underperforming. And I stuck with names like Iron because I had a view from December 2022 that Iron would be one of the best performing Bitcoin proxies. That's done better than expected, right? It won't always be that way. And you have to have a fair bit of humility about this because you don't get them all right. But when you do get them right, you got to size them up big and take advantage of it. So I don't know what happens from here out. I just know that if I'm an investor here, like I'm going to stick with things where I think there's real competitive differentiation. And if you are one of a few dozen treasury companies all saying you're going to issue preferreds, then I'm probably not going to be that interested in that story.
I want to talk about a little bit of the changing cultural norms. 2021, the kind of narrative was buy and hold Bitcoin, eschew all other alternatives, perhaps. Now there's this competing, plethora of options, but they're also competing for mindshare amongst Bitcoiners. How do you think about your portfolio allocation and how much is going to Bitcoin versus, Bitcoin-based alternatives or, other crypto alternatives? How do you think about that mix being biased towards, the Bitcoin future?
Look, I think Bitcoin is the least spot Bitcoin that you control is the least risky investment / savings vehicle in the history of the world. Period. Full stop. End of story. But put that aside. I think Bitcoin should be the foundation of any successful long-term allocation investment strategy, whether for an individual or an institution. And I'll just say for the record, like my mom only owns Bitcoin in this sector. She doesn't own any miners. She doesn't own any MSTR. She doesn't own any IBIT, nothing. She just owns spot Bitcoin. My father-in-law, same thing. He's asked me many times, should I own Ethereum? And I say no. He's asked me many times, should I own Iron or Cypher since you believe in them? And I said no. And so I'm a professional investor and a company builder for a living, right? And so like I have to be agnostic, even though I believe for the average person, they'll do better taking 90% of their wealth and putting in Bitcoin than doing anything else. I can't run a fund, right? Or like manage money with the concept that you can just do something that you can do on your own. I have to take swings to try to build more value than that. And so I'm doing stuff that candidly most people shouldn't try, right? Like most people shouldn't ride a motorcycle off a cliff with a parachute either, but some people do it and it looks quite fun and cool if you can do it and not die, right? And so like a lot of what I do investing wise, I give people the caveat. I say, look, I'm a professional investor. I've had a lot of success doing this, taking bigger swings, concentration, going for larger returns than Bitcoin, but most people will not achieve success doing that. And most people, if they're not doing it 24/7 as I am, they're not going to achieve the same results. So like my typical recommendation for an average person is like take 10, 15, 20% of your portfolio and put it in Bitcoin, never touch it, never do anything with it. If you need income, buy really safe, really secure, like dividend value stocks as the other part of the barbell. That allows you to generate enough fiat income. There's kind of two schools of thoughts. I mean, there are multiple schools of thoughts, but like when I argue about this with people, they're like, well, why not just be 100% Bitcoin and just sell some whenever you need income? And I'm like, look, the moment you give the average person the option to sell some, they're going to make mistakes. So my job when I'm coaching other people, again, I do this informally. I don't manage money for any small investor or like give any advice, but I say, look, if you have to have timing instinct, you have to decide, oh, Bitcoin's 122.5 right now, I should sell some. And then because I need to pay my bills next week, like you're going to make a lot of mistakes doing that because it's not systematic. So what I say is buy an amount of Bitcoin that you never have to touch it and let it just grow for 10, 15, 20 years. The rest of your portfolio should be allocated to generating enough fiat revenue effectively that you can cover all of your expenses. So you never have to think about selling your Bitcoin. That way you get to 5, 10, 15 years from now with all the Bitcoin you have now. And I said that by itself will replace the entirety of the rest of your portfolio, and the rest of your portfolio can cover your rent, your mobile phone bill, your insurance, your healthcare, et cetera. And that's not popular with a lot of maxis, but in my experience, like any other strategy other than that leads people to make mistakes. And they're psychological mistakes, they're emotional mistakes, and those are the primary things you need to protect against if you want to do long-term investing successfully.
Well, obviously, I know you're having a lot of conversations. You're out there in boardrooms. You're on the phone sometimes with interesting calls. So, what are they saying in the boardrooms? What are they saying in the kind of halls of Wall Street now about Bitcoin, and how has the tune changed over the last year, according to your information?
Yeah, look, so I talk to a lot of real people, and occasionally for Twitter shit posting purposes, I talk to a handful of fake people. People get a kick out of it. They think it's really funny, and it's part of why I'm polarizing, and that's fine. I don't really care what people think about it. My job is to be an investor first, right? So when I'm talking to people at a high level, though, like whether in a board context or just other hedge funds, other investment managers, I think the biggest thing that's shifted over the last 4 or 5 years is it used to be really popular to say, oh yeah, we don't really own Bitcoin because it's too risky. Like, but we think blockchain has applicability to, the back end, or has applicability to securitizing different things or whatever. And that opinion, I think, has mostly been debunked. Like, you won't find very many smart investors anymore at a high level that have survived, that haven't finally admitted that like the debasement of the currency is a real thing. And like Bitcoin is one useful tool to use to sort of counteract that. And I think that's the biggest thing. Like, I think there are still ignorant people, but they'll freely admit early in the conversation that they don't really know, instead of launching into, well, won't the government stop you from using it? Like, isn't that only used by criminals? You know, all the talking points that we've heard from negative people about Bitcoin over the last 5-7 years. Nobody wants to look dumb anymore. And they've started to realize that maybe they don't know as much as they thought they did. And I think that's like Stan Druckenmiller, right? And Paul Tudor Jones, and even Ray Dalio, and like people like that saying, hey, like, this is a real asset and we own it. A lot of lower level investment managers who aren't billionaires and don't run the biggest hedge funds in the world have now said, okay, well, if they're saying that, then maybe I don't know as much as I think I do. And so it's made my job easier. Like, I usually walk into a room now, I don't have to convince anyone to like Bitcoin. The question is only, what is the best way to participate in that at different moments in time, right? Because institutional investors have institutional constraints. They got to mark to market every day, every week, every month. So like if they take a huge drawdown, then they've got to report that to their investors. They could lose investor capital from that. And so they're thinking differently than an individual who doesn't care about mark to market drawdowns. So they'll often ask me like, well, yeah, like I agree with you. Like, I think you're totally right long term, but what about in the next few weeks or next few months? Don't you think it's gotten a little hot? And I'll say, well, maybe, but like, what percentage of your portfolio should be allocated this long term? And then maybe just like leg into it over the next 12 months. Right? It's like the same conversation you'd have with a retail investor, but institutions have to work through the same thing. And they actually, in a lot of ways, have more constraints than individuals because they don't want to lose their jobs making a decision that costs them money. Right? So it's a tricky setup for them. But for those of us who've been in for a long time, like, it's so obvious now that really the only issue is to not own enough. Right? And once you've put enough time from when you've allocated like a year, 2 years, or 3 years behind you, like, you're almost certainly going to generate sort of purchasing power increases in dollar terms, just owning Bitcoin. And so like, once you understand that, like, you can do DCA, right? But really, like, if you look at the math, a lump sum contribution in almost every period is going to be better than DCA. Right. So like, you look back it's like 5 years out or 7 years out, like a lump sum is going to be DCA. Because the average price over the next 10 years is going to be much higher than 122. And like, once people understand that, they're like, fuck, I don't like it. It doesn't feel good. And it feels like it could go back to 110 or 105 or 107, but I have to do it because I agree with you on a point to point basis. We're heading to 200, 300, 500. And that's really what I do. Point to point investing. I largely, even though I trade liquid assets, invest in them, I don't really care about mark to market, right? I don't have a structure that requires me to like take phone calls from a bunch of people every time we draw down. And so I'm able to like close my eyes and I just draw a line 3 years out and I say, here's where it's going to end up. And I know there's going to be a lot of zig and zag to get there, but I don't have to manage for that. And that allows me to like make those longer term bets and still sleep well at night.
A little bit of a counterpoint to what you were saying about the institutions, maybe moving away from crypto and more exotic digital assets. Michael Saylor in Bitcoin DC just the other day, talking pretty openly now about tokenization, tokenizing assets, even referencing like Binance chain or Ethereum chain, Solana chain, kind of stuff that would almost be unimaginable a few years ago, talking about, celebrities issuing tokens and that this is real value unlock. It does seem like there's been a bit of a softening. I mean, even I noticed it talking to the folks in the Bitcoin Treasury company movement. There's not so much anti-crypto sentiment anymore. You don't think that there's been a warming? There's more of a recognition of these things. I guess how do you look at it, given that we both were around for the real heyday of Bitcoin maximalism?
Yeah, look, but I think you know this, Pete. Like I've largely been ostracized from the traditional maxi cult or whatever you want to call it. I wouldn't call it a cult because I don't want to piss them off more than I already have. But look at like the maxi group that was on X like 3, 4, 5 years ago. Like I largely got tossed out because I got in a fight with a couple of maxis, right? I disagreed because my argument then was as it is now, like to do my job, I can't be cultish in my thinking. I can't be insular. I can't say everything else is bad. Like I'm a company investor. Like I build companies, I invest in companies, what I do for a living. Like if you're a software engineer and you write code all day and you just love Bitcoin, you're 100% Bitcoin and cold storage, great. Like I don't judge the person for doing that. And like I appreciate not being judged for doing what I do. But I stopped even trying to make that argument because it candidly doesn't matter. So I was never like I've owned Ethereum for years and I bought it at $30 in 17 and sold it for a couple hundred and then it went to 1,000 and then I bought it back in 300 in 2020 and never sold it. I view it as a like a long-term VC type of thing. I don't actually use it. I don't really even care about it, but I just like having it in my portfolio just as a hedge against Bitcoin not being the only digital asset that has success. Like in terms of what's driving like what's happening now, it's mostly regulation driven. I mean, the Trump White House has launched their own shitcoins. So like it sort of opened the door for almost anything to happen. And I was quite negative on that. Like I'm not negative on digital assets as a broad theme. I'm not even negative on crypto, but I am negative on money grabs, negative on things that are sort of cynical and don't really have any purpose. But I think there are plenty of things that have real utility that aren't Bitcoin. I mean, Bitcoin is not tooled like natively to do the types of smart contracts or the type of decentralized trading or the type of tokenization that you might do on other chains. And that's fine. I don't want Bitcoin to do that. I like Bitcoin for what it is. I love proof of work. Obviously, I love proof of work. I'm on the board of the now biggest publicly traded Bitcoin miner. But I don't really care what anyone else does. Like I never did. I'm sort of like a true libertarian. And so back in 2020 and 21, when I was getting in these arguments on X, I sort of was like a little bit annoyed at first. And then I realized, no, they're just playing their role just like I'm playing my role. Like everybody's playing their role in the ecosystem. And in the long arc of time, none of this matters. Like no one's going to remember any of us, but Bitcoin will still be around.
Well, that's a sobering thought. So I guess as you look to next year and what you're expecting and just the institutional climate, every cycle, it seems like institutions are here. Obviously, the institutions are more here than they ever have been. What do you think happens when the banks really start getting involved and this gets started rolling out on the consumer level? Do you think we'll see that next year? I think how do you think our experience and access to Bitcoin changes over the next year or so?
I think it's going to be just like the internet, where for periods of time over the last 5, 6, 7 years, like people who use Bitcoin on chain or interacted with Bitcoin were largely like people who understood how to get on the internet in 1997 via a phone modem. And we're going to transition over the next decade into a world that looks more like Uber, Facebook, Google, et cetera, where like it's easy to access. Everybody has broadband. It's user friendly. You're going to obfuscate away from the complexity of crypto and blockchain and wallets and all that. And there's just going to be easy to use applications. One good example is something we're doing at Back, which is like an AI driven platform that allows you to just write a note to an AI assistant that says send $500 from the US to Mexico or send $500 to Argentina, and it'll be instant. It'll all happen over sort of stablecoin rails using tokenized money market funds, et cetera. And the entire sort of experience of using crypto is abstracted away behind the app. So that's sort of what happened with the internet. Like you used to have to write code basically to interact with the internet. You used to like have to be an IT guy to use the internet in like the mid 90s. And then it went from there to a mass market consumer application on multiple devices that if you don't use, you're literally not participating in the economy. And I think Bitcoin's going to go through that same metamorphosis. It's going to cause some kind of people that are purists to say, oh, I don't like this. Like it's being subsumed into the broader economy and the banks are taking it over and the government's taking it over. But to me, that was always where it was headed, because if it was going to become truly the world's money, it was going to be forced to become part of the like infrastructure of how the world works, the same way the internet did. I just think like people didn't have the same sort of dogmatic view of the internet. Like there was no like internet maxis who were like, I'm never using a fax or I'm never using the mail. Like if you use the mail, you're an idiot. You got to use the internet. There's only one internet, right? And like in crypto, for some reason, it elicits this almost quasi-religious fervor around it that's, in my view, almost unnecessary. Like you can love something without being willing to like blow up your relationship with someone because they like something differently. It tells you how magical the space is and how meaningful it is. But it also, I think some people have like lost the plot. Like if somebody did that with the internet, you'd be like, that's retarded. Like the internet's going to go viral. Everyone's going to use it. And the fact that your neighbor who didn't use it 3 years ago uses it differently than you to do something different is irrelevant. Like the value of the internet is in the network effect of it. It's Metcalfe's law. Like we got to keep increasing the nodes that use it. Well, the best way to do that is to sort of make it super useful and easy to access for everyone, not to make it this sort of reclusive, sort of insular culture where like only people who write code and really understand like the legacy of Bitcoin from 12 years ago, like can participate. No, like everyone's going to use it. And that's good, is my view.
Winding down here, I know you look at the markets, know you're always questioning things. What are your unanswered questions about Bitcoin? Do you have them? Are there edge case scenarios? Obviously, if you go deep enough on Twitter, there's a lot of folks who's saying, the sky is falling in Bitcoin, that things are close to doom. What is do you have unanswered questions about Bitcoin in the future that you're still noodling?
So the Bitcoin OG, like a really wealthy Bitcoin OG, sent me a DM a week ago and said, Mike, you really need to pay attention to this knots versus core thing. It's going to blow up by next Friday. And I wrote back bullish in all capital letters. And he sent a smiley face emoji. Like that was pretty funny because he thinks it's like in the end of the world. Here we are. It's Friday. It's been a week and Bitcoin's sitting just below all-time highs, almost went over all-time highs. So, I mean, as a professional investor, like I've underwritten Bitcoin for 8 years, right? The reason why I like it is it's fundamentally anti-fragile. So I think the biggest mistake you can make as an allocator in this space is to read too much news. If you've underwritten correctly, the news is effectively irrelevant because it's going to fix itself because it's a self-fixing platform. It's like an organic living thing. And so, yeah, there'll be arguments about quantum computing. There'll be arguments about NFTs on Bitcoin. There'll be arguments about knots versus core. There'll be all these things. And in my view, 5 years from now, we'll look back and it'll largely all be noise because if I'm correct about the way Bitcoin's structured from a decentralization standpoint and from a mutability standpoint, it's not going to matter. Like these things will get resolved. They may be messy from time to time, but the problem is if you buy into that shit when it's happening, like you end up selling Bitcoin or trimming proxies right before they run because these assets tend to run when there's the most insecurity and when there's the most sort of like cloud around the space. Like you actually want a bunch of people to be doubtful because that's what drives price action. So I get quite bullish when people say there's existential risk to Bitcoin. Like if we don't figure out this core thing, it's going to be like a huge problem. Like, great. If you personally like are interested in it from a social standpoint or like personally involved, great. But as an investor, it behooves you to basically like read it, understand it, and then ignore it. Right. Because if you're correct about the thesis, then Bitcoin will resolve it organically. And all you'll have done is worked yourself up and potentially made poor and emotional decisions around Bitcoin that are completely unnecessary. And that holds true of any asset. Like I made a lot of money just fading negativity and fear over the years. And basically I look for that now. Like whenever I see like a buildup of a significant amount of fear, I look to buy whatever that thing is. I just wait until the fear gets to a fever pitch. So I actually hope all this hand wringing and drama around this knots versus core thing gets worse because that if it creates a buying opportunity at all, I'd love to buy that, right? Because we're going to be higher irrespective of how that resolves, in my opinion.
Fascinating stuff. Always contrarian, always thinking through stuff. Mike, where can people follow you? Where can they find out more about how you invest and how you think through the markets?
Just add Mike Alfred on X. And thanks again, Pete, for having me. I know anybody who has me on their show that is either a current maxi or like a traditional maxi or whatever takes some career risk in doing so. So I applaud you for even having me on. Hopefully I won't offend too many purists out there, but look, I love everybody. Like we're all going to do so well in the sector. And so like there's room for many, many different types of people.
Well, I will say, you're joining the pantheon of some other controversial guests as well. We're open doors here, and we like our folks to shake things up, right? I think you never want to keep your thinking too static, right? We got iron sharpens iron, right?
Appreciate
Mike,
that.
Appreciate you being on the podcast. For those of you on the internet watching, feel free to like and hit that subscribe button. If you are on the web, go to blockworks.co/events. We're going to be out in London for the Digital Asset Summit just weeks away. Still tickets available, still VIP tickets available. Digital Asset Summit coming to London. For now, this has been Supply Shock, a Blockworks podcast.